Hey everyone, welcome back. Ready to dive into a world of, well, pretty much everything you see when you look at a car.
Sounds intriguing.
Today, we're taking a look at Samvardhana Motherson International Limited, SAMIL for short.
Ah, SAMIL, interesting.
They're a global player in automotive components. And their Q2 FY25 report. It's like a roadmap of where this whole industry is headed.
I'm all ears. What have they been up to?
Buckle up because it's a wild ride. Now, before we get started, if you want to stay ahead of the curve and make those smart investment decisions, do us a favor, hit that like button and subscribe to the channel. All right, let's get into it. SAMIL, they're not just making a few parts here and there.
Right, I've heard that.
We're talking everything from bumpers and dashboards to mirrors and entire door panels.
It's pretty impressive, the sheer scope of their portfolio. It speaks volumes about how complex the automotive supply chain has become. You don't just need a mechanic anymore, you need a whole team of specialists.
Exactly. And their financials. Well, they tell a pretty compelling story. Revenue growth in Q2, a cool 18% year over year.
Wow, that's a significant jump, especially given the current economic climate. Not many companies are posting those kinds of numbers.
Agreed. It definitely caught my eye. And their normalized PAT, hold on to your hats, a 336% increase year over year.
That's not a typo, 336%.
Nope, straight from the report. Their core operations are firing on all cylinders.
They're definitely doing something right. And on top of that, they're getting even more efficient with their investments. Their return on capital employed, or ROCE, jumped to 17.3%.
That's a really healthy sign for long-term growth, isn't it?
Absolutely. It shows they're making smart decisions about where to allocate their resources. They're not just throwing money at problems, they're investing strategically.
Okay, so far so good. But, there's always a but lurking in these reports.
Haha, right. There's always a catch.
Their modules and polymer segment saw declining margins. What's going on there? Is this a temporary blip or a sign of something more serious?
That's the million-dollar question. It could be a number of factors at play. Maybe increased competition in that specific market segment. Or perhaps rising input costs are squeezing their margins. Could be the raw materials used in those particular products are becoming more expensive.
Yeah, that makes sense. But here's the interesting part. Despite this dip, SAMIL is going all in on expansion.
Expansion? Real?
New markets, new industries, even dipping their toes into the world of consumer electronics.
Wow, that's a bold move. Especially considering the uncertainties in the automotive world right now.
You're not kidding. Speaking of which, they just shipped their first batch of consumer electronics products.
They're not wasting any time. Do you think it's a wise move?
Diversifying like this, I mean.
It could be a brilliant hedge against the volatility of the car market. Don't put all your eggs in one basket and all that.
It's definitely a way to spread the risk, but the automotive industry itself is in, how did the report put it? A transitionary period. What exactly does that mean? Are we all going to be driving flying cars soon? Wouldn't that be something?
Well, maybe not flying cars just yet, but the traditional car market. It's facing some serious disruptions.
Yeah, you're right. It seems like the whole world is waiting for electric vehicles to take over, but it's not happening as quickly as some people predicted.
Absolutely. For starters, overall vehicle production is down 5% year over year.
That's significant. What's driving that decline?
It's a mix of factors. Supply chain issues are still lingering, but there's also the issue of shifting consumer preferences. Not everyone's jumping on the EV bandwagon just yet.
I guess it's like the whole industry is stuck between gears, with one foot on the gas and the other on the brake. No one's quite sure when to fully commit.
That's a great analogy. And the electric vehicle rollout, it's been, well, let's just say it hasn't been as smooth as many hoped.
Yeah, it's been a bit bumpy, to say the least. Didn't new vehicle launches get delayed because the demand for EVs wasn't as high as expected?
Exactly, and that's a bit of a head-scratcher. You'd think with all the hype surrounding electric vehicles, they'd be flying off the lots.
Yeah.
But it seems like there's still some hesitation.
Well, range anxiety is still a thing for a lot of people, right? And the whole charging infrastructure needs to catch up.
Those are definitely factors. Plus, there's the whole economic uncertainty looming over everything. People tend to get a bit cautious about big-ticket purchases when the economy feels shaky.
True, a new car is a major investment. So how does all of this impact a company like SAMIL? They're still heavily reliant on the automotive sector, right?
That's right, and these trends are creating some pretty strong headwinds for them. But it's not all doom and gloom. Let's not forget about their massive order book.
Oh, right. They've got a pretty impressive backlog, don't they?
We're talking a whopping $88 billion worth of orders. That's a lot of revenue secured for the coming years.
That's a pretty solid safety net, wouldn't you say?
Absolutely. It shows that they have strong relationships with car manufacturers worldwide. And don't forget about their diversification into consumer electronics. That could be a smart way to tap into new markets and offset any slowdown in the automotive sector.
So it's like they're anticipating those market shifts and adapting their strategy accordingly.
Exactly. They're not just sitting back and waiting to see what happens. They're being proactive.
That's a good sign.
Yeah.
But even with diversification, they're still exposed to the ups and downs of the automotive market. What are some key things investors should be watching out for?
Well, the report highlighted a shift of consumer mix in the Chinese auto market. And that's a big deal because China is the world's largest car market. Any changes there send ripples throughout the entire industry.
Okay, so what's happening in China that has SAMIL's radar pinging? Is it just a general slowdown in car sales?
It's a bit more nuanced than that. It seems Chinese consumers are increasingly favoring domestic car brands over international ones.
Interesting. Why do you think that is? Is it a quality thing, a price thing, or something else?
It's likely a combination of factors. There's definitely an element of rising nationalism, people wanting to support their own country's industries. But there are also government policies in place that are designed to support local companies.
So it's not just consumer preference, there's a bit of government influence in the mix as well.
Exactly. And let's not forget that Chinese automakers have become incredibly competitive in recent years. They're producing high-quality vehicles at competitive prices.
Wow, so it's a triple whammy. Nationalism, government support, and increased competitiveness. That's a lot for international brands to contend with.
It definitely creates a challenging landscape, and it's a good reminder that even global giants like SAMIL aren't immune to regional trends and geopolitical shifts.
You're right, it's a global market, but local dynamics can still have a huge impact. So we've got shifting consumer preferences, production declines, and a whole new ball game in China. Anything else brewing in the background?
Well, the report did mention a mixed bag of macro indicators.
Ah, yes, the ever-present macro indicators. What exactly does that mean?
It's basically a fancy way of saying that the global economy is sending some mixed signals. We're talking about things like interest rates, inflation, and commodity prices. Specifically, the price of copper, which is on the rise again.
Ah, the global economic roller coaster. Never a dull moment. Let's break down each of those factors, starting with interest rates. How do rising interest rates impact a company like SAMIL?
Well, for starters, it makes it more expensive for companies to borrow money.
Right, borrowing costs go up. Makes sense.
That means it becomes more costly for companies like SAMIL to invest in things like expansion, research, and development, the things that drive future growth.
So rising interest rates can put a damper on their ability to innovate and expand.
Exactly. And it's not just the company itself that feels the pinch. Higher interest rates also make it more expensive for consumers to finance new car purchases.
Ah, so it could potentially dampen demand as well.
Precisely. It's a double whammy. Higher costs for SAMIL and potentially fewer customers with the means to buy new cars. It's a delicate balancing act for them to navigate.
Definitely adds another layer of complexity to their situation. Okay, so we've got interest rates. What about inflation? How does that factor into the equation?
Inflation makes everything more expensive, right?
Yeah, that's the basic idea.
And that includes the raw materials that SAMIL needs to manufacture its components. So as inflation rises, their production costs go up, and then they face a tough choice. Do they absorb those higher costs, which hurts their profit margins, or do they pass those costs along to their customers?
And if they raise prices, they risk making their products less competitive.
Exactly. It's a catch-22 situation. They're stuck between a rock and a hard place.
And what about this copper situation? Why is the rising price of copper causing such a stir in the automotive world?
Well, copper is a key ingredient in electrical wiring and components, which, as you can imagine, are used extensively in vehicles. So when the price of copper goes up, it directly impacts SAMIL's production costs. Just like with any other raw material, higher prices mean tighter margins.
So we've got interest rates, inflation, and copper prices, all potentially putting the squeeze on SAMIL. It's no wonder the industry is calling this a transitionary period. It feels more like a full-blown upheaval.
Yeah. Transitionary might be an understatement. But the key takeaway here is that all of these factors, these macro trends, are interconnected. Understanding how they impact a company like SAMIL is crucial for anyone considering investing in this space.
We've definitely gotten a crash course in global economics today. Before we move on, let's do a quick recap. We've established that SAMIL has impressive growth, But they're also facing some serious challenges from a changing automotive market, shifting consumer demand, and these macroeconomic factors that are swirling around them.
That's a spot-on summary. It's a classic example of how a company's performance isn't just about its own operations, but also about the larger economic forces at play.
Absolutely. It's all connected. Speaking of context, let's shift gears and dive into SAMIL's management outlook. How are they planning to navigate these choppy waters? But first, a quick message. Welcome back, everyone. Before the break, we were talking about SAMIL and how the company is dealing with a pretty unpredictable global market.
Yeah, it's a lot to juggle for sure. There's the changing tastes of consumers, and then, of course, there's always the economic uncertainties. Plus, let's not forget those geopolitical shifts happening all over.
Right, so it sounds like SAMIL's facing challenges from every direction. So how are they responding? Are they playing it safe and waiting to see what happens, or are they taking charge and charting a new course?
Well, their management team is actually pretty optimistic. They're saying they believe their diversification, expanding into new areas along with their strong financial standing, and those long-term relationships they have with customers will get them through.
So they're feeling confident. That's great to hear, especially with so many companies sort of hitting the pause button right now with all the economic uncertainty. But I'm curious, is this optimism about their future realistic? I'm thinking specifically about their move into consumer electronics. Is it really that easy? Just jump into a new market and start raking in the profits?
You make a good point there. Diversification is definitely a smart move, generally speaking, but there's no guarantee of success in a brand new market. It's uncharted territory for Samwell, right?
Right.
They're going to need to really leverage what they already know, their expertise, and then they've got to execute their strategy perfectly to make this new venture work. No room for mistakes.
Yeah, it makes sense. It's one thing to have a plan, but actually putting it into action and doing it well, that's the real challenge. So besides this new electronics thing, what are they doing within their main automotive business to adapt to this changing world?
Well, they're laser focused on two main strategies. Number one is something they're calling a powertrain agnostic approach. What that means is they're making parts that can be used in the traditional cars with the good old combustion engines and also in the newer electric or hybrid models.
So they're not picking a side in the gas versus electric debate. They're ready to supply parts for both.
Exactly. Smart, right?
It is smart. That way, no matter which technology ends up dominating, SAMIL is ready.
It's all about flexibility, and that flexibility lets them give their customers what they need no matter what direction the market goes. Their second focus, their second strategy, is on staying financially strong. They've got this really healthy balance sheet, which means they have the wiggle room to invest in new technologies, they can acquire other companies, if that makes sense, and they can ride out any short-term economic bumps in the road.
So they've got a nice cushion. That financial stability must be really reassuring, especially in these uncertain times where everything feels shaky. But let's be honest here, the automotive market is known for its ups and downs. It's cyclical. What if there's a major downturn in the economy, like a full-blown recession? Could that completely derail all of SAMIL's growth plans?
It's definitely a valid concern, for sure. No company is completely immune to what happens with the global economy. But here's where all that diversification comes in. If one part of their business starts to weaken, like if car sales plummet during a recession, their other businesses could potentially pick up the slack.
Right. The electronic side could help offset any losses in the automotive side.
Yeah,
So it's all about spreading that risk, right? Don't put all your eggs in one basket, as they say.
exactly. You got it.
Okay. So let's summarize where we are with SAMIL. We've got a company with a very strong financial position, a diverse portfolio of products and businesses, and a management team that seems pretty confident about steering the ship through choppy waters.
Sounds about right. But of course, they're not sailing in perfectly calm seas. They've got some serious headwinds, like we've been talking about. The whole automotive landscape is changing rapidly, the global economy is uncertain, and we can't forget about those geopolitical shifts that always seem to be throwing a wrench into things.
That's the perfect way to sum it up. It's a complex situation, there's no doubt about that. But hey, that's why we're here. We're diving deep into these issues so you can get a better understanding of what's going on. And hopefully, this deep dive is giving you the information you need so you can, come to your own conclusions about what the future holds for SAMIL.
That's the goal. I always say the more informed you are, the better decisions you can make, whether you're an investor, a business owner, or just someone who wants to understand the world a little better. Knowledge is power.
Couldn't agree more. Before we wrap things up, I'm curious to get your take on SAMIL's future. Given everything we've discussed, what are the key factors you'd be watching if you were an investor? what would be on your radar?
Ooh, that's a good question. If I were an investor, I'd be keeping a close eye on a few things. First of all, well, I'd definitely be watching how well they integrate those acquisitions they've made, especially in the consumer electronics area. It's a big move, right? So the question is, can they really use those acquisitions to, create some synergy and boost growth in areas beyond just automotive?
Yeah.
That's going to be key to their long-term success for sure.
It's almost like they're building this whole other lane for themselves, running alongside their core automotive business, ready to take over if that side hits a roadblock.
Exactly.
Hmm.
And the other thing I'd be watching closely is how they're handling the risks that come with all those macroeconomic factors we've been talking about. Interest rates, inflation, the price of copper, all
Yeah.
that stuff.
Yeah, can't forget about those.
Right. Those external forces can have a big impact, especially on a global manufacturing company like SAMIL.
It just goes to show that even the best-run companies aren't immune to what's happening in the wider world. The big picture, the economic context, it always plays a role.
No doubt about it. But what I find impressive about SAMIL is that they seem to really get this. It feels like they're taking proactive steps to deal with these challenges. They're not just burying their heads in the sand.
It's one thing to weather the storm, but it's another thing entirely to come out the other side even stronger. And that takes, well, it takes being flexible, thinking ahead, and a willingness to embrace change.
You nailed it. And that's what makes studying companies like SAMIL so fascinating. They give you a glimpse into how businesses are adapting to a world that's constantly changing.
Very well said. I think we've covered a ton of ground today. We talked about Samil's impressive growth, but also the headwinds they're facing. We dove into their expansion strategy and all those complicated global economic factors that are swirling around out there.
Definitely a lot to digest.
If you found this deep dive helpful, don't forget to hit that like button and subscribe to the channel. We're here to help you make those informed investment decisions. And remember, this is just the beginning of the conversation. We want to hear what you think.
Absolutely. What does the future hold for companies like SAMIL? Share your predictions and insights in the comments below. Let's keep this discussion going.
Great idea. So until next time, keep exploring, keep learning, and keep diving deep into the world around you.
You got it. There's always something new to discover.
Absolutely. The world is full of fascinating stories just waiting to be uncovered. All you have to do is look beneath the surface.